Hello, good evening. I think I am audible. Hello, good evening.
Good evening, madam.
Okay, can we start the session? Okay.
Yes, madam.
So this is just a reminder. Last week, in the last session, I started business income. So in the business income, we discussed about. Actually, this is not these are deduction rules. So specific deduction rules are here. So from section 12, we can start deduction rules. So I have mentioned the the title of the slides as business income part 2, but these are deduction rules applicable to both business income and investment income, but some deduction rules are not applicable for investment, but most of the rules are applicable for business income. So this is section 12. We did it one of the previous sessions. Deduction of interest expenditure. So what are the provision applicable? That is section 12. If it is an individual without any restriction, we can deduct if that is incurred in the production of income, or if the borrowed money used to purchase an asset, and if that asset is used for the production of income, then also that is the finance cost or interest amount can be allowed as a deduction. But if we considering a company, then there is a limitation. So that limitation is mentioned under section 18. So if it is an individual without any limitation, we can deduct interest expenditure. But if it is a company with the after applying some rules in section 18, we can deduct. So that is interest expenditure. Then we discussed about allowance for trading stock, that is completely equal to the cost of sales. So you know what is cost of sales. I explained it last week. Then we discussed about section 14, that was repair and improvements, expenditure incurred for repair and improvements. So at that time I explained that this provision is applicable to the repair and improvement expenditure that are used for the depreciable assets. So that is, if we use that if we incur expenditure on repair and improvements only for the purpose of only for the depreciable asset, then only section 14 is applicable, because it is mentioned in the act. It says depreciable assets, we incur expenditure on repair and improvement of depreciable asset, then only section 14 is applicable. If that expenditure is incurred other than depreciable asset, then under section 11 is the main deduction rule. So under section 11 we can deduct that expenditure. But the issue is, when we are deducting expenditure under section 11, capital nature expenditure cannot be deducted. So that is the difference between main deduction rule and the specific deduction rule. So I have given you the details. Then we discussed about the limitation. So if that is expenditure is incurred in the repair, earlier we had earlier means prior to 2021 March 31st, if we incurred some expenditure for repair and improvement both, then we had to limit that expenditure, and we could deduct only expenditure or only after restricting some amounts. If we had some undeducted expenditure, we had to add it to the cost for the deduction in the subsequent period. So but after 2021 that provision was amended. So now with that amendment we can apply section 14. So when we are applying section 14, definitely it should be for the improvement. Sound is very low. So what is the reason? So if we incurred some expenditure for repair and improvements, and how is now? Is it clear now, or still it is still sound is low? Hello, can you hear me now properly? Little bit okay. So what is the issue? I cannot understand. So if I use can't. So what is the reason? Because is it for all students or only for few students? All others cannot hear me properly.
Thank you, madam.
I'm sorry.
Madam, earlier not clear, but now it is okay.
Okay, thank you very much. Okay, now we can start. Because this is the machine I use for my other online sessions also. So this is the first time they said that you cannot hear. So now it's okay. Okay, thank you. Okay, now we can start. So if it is for the repair expenditure, that means after 2021, if it is for the repair expenditure incurred for a depreciable asset, then without any restriction we can deduct. But if it is for an improvement expenditure, we have to apply this formula to restrict that expenditure. The balance should be added to the depreciation basis. So I explained this provision with this example. So I think you can understand the section properly. So there is a special machine purchased in 2018-19. After that, several expenditure were incurred for the repairs and improvement. So prior to 2021, repair expenditure also restricted, but I have given you the example with similar to your year of assessment, similar to your period, because now we are calculating for the year of assessment 2025-26. So the applicable provision now is without restricting any amount, repair expenditure can be deducted. So if it is only an improvement, we have to restrict some expenditure. So since this is a machine, 20% can be applied, because that the percentage is decided based on the class of the asset. That means if it is a repair or improvement incurred in respect of a building, because buildings are categorized under class 4, if it is in respect of a building, then only applicable percentage is 5%. If it is other than building, other than class 4 asset, then 20% should be deducted, balance should be added to the depreciation basis. So that is how we calculated this example. Then we did it like this. If it is for the repair, for that means in the 21-22 year of assessment, if that expenditure is incurred in respect of a depreciable asset, then that total amount was allowed as a deduction. But if it is for the improvement, that amount also was restricted based on the previous year written down value. So in this example, previous year written down value we considered, then we applied 20% on that. So we identified the allowable amount as 1.6 million. The balance was not allowed as a deduction, so that not allowed amount should be added to the depreciation basis on during that year of assessment. So that is why we added it to million 4. So this is just a reminder. So we did this example last week. So I think you can understand the way, the method, the applicable formula for the application of section 14. Then we discussed about section 15, that is for research and development and agricultural startup. So I explained what is the research and development expenditure and then what is the agricultural startup expenditure. So it is given in the section also as a definition for that specific type of expenditure. Then today we have to start from section 15A. So section 15, in the Principal Act we had section 15 and section 16, but in between now we have section 15A. So I think you can remember in my first lecture I explained about the amendments, the additions made to this section. So here this is a addition to a new section, so we call it section 15A. That is why we have this capital A here. Without bracket we call it section. No bracket within this 15A. So therefore it is a section. So section 15A is for marketing and communication expenditure. So this is started from 2021 year of assessment. So if we are incurring some expenditure for marketing and communication without considering whether that is capital nature expenditure or not, we can deduct total amount. So that is why we have this provision. Prior to inclusion of this provision, we applied only section 11, that means main deduction rule. So what is the difference between main deduction rule and specific deduction rule? That is the capital nature deduction. So if we applied section 11 for marketing and communication, that means prior to 2021, we couldn't deduct capital nature expenditure because it was not allowed. So because of that we included section 15A for marketing and communication expenses, because prior to this new section there were some limitations for the deduction of advertising and all other similar expenditure incurred for marketing and communication. But after that, since we included new section and that new section allows to deduct capital nature expenditure, therefore we can deduct not only the revenue nature but the capital nature expenses also can be deducted under section 15A. So for the deduction of that expenditure, we should know what are the expenditure that can be deducted under marketing and communication. So for that purpose, under section 15A, we have given a specific definition. In that definition, it says what are the expenditure that can be considered as marketing and communication. So first one is market research. If a company incur some expenditure for market research, it can be deducted irrespective of whether that expenditure is a capital nature or not. If that expenditure is paid, that payment is paid to any local institution, or if that expenditure is carried out by the same person. So if that market research is expenditure of market research is paid to any local institution or to any person, or if that market research is carried out by the same person, then the expenditure incurred for that market research is allowable under section 15A. So this is a special criteria, special item that they have to fulfill to be deducted under section 15A. That means if that market research is carried out by any other foreign institution, that means we have to make the payment to foreign institution for that service. So that is not deductible under section 15A. So for the deduction of market research under section 15A, definitely that market research should be carried out by the same person. That means that same company or that same person, person includes individuals and entities. So it can be either per individual or a company or any local institution. So that means it is restricted only to local institutions. If that market research is carried out by a foreign institution, then that amount of payment cannot be deducted under section 15A. Then the next deduction is, next expenditure under section 15A is development or production of marketing. It can be development or a production of marketing, advertising and communication campaign. It can be development or production of any marketing, advertising and communication campaign that should be carried out in Sri Lanka. So that is also should be carried out in Sri Lanka. So I think you can understand the intention of introducing this new section. So this section was introduced to encourage local advertising firms. That means if any person needs to incur some expenditure for advertising research, then if they are carrying out that, if they are obtaining that service from a local institution, then only it is deductible with irrespective of whether that is capital nature or not. So they wanted to encourage local advertising firms. The next one is advertising on mainstream media or social media. So what are the mainstream media? That is television, radio, print or any outdoor advertising. So that is advertising. So we are going to advertise in television, radio, print or as outside advertising. So now we don't have then local institution term, because if we want to advertise our products in the television, radio or any other way, it is better if we can do it in international television also. So then we can promote our products in the worldwide. So that is why we have not included that carried out in Sri Lanka or local institution term. If that advertising is on mainstream media, that means we can advertise our advertisements in foreign television. No issue. That amount can be deducted, total amount can be deducted under section 15A. Then the next one is product launches or campaign activation. If we are going to launch a product or activation of a campaign, if that is carried out by the same person or local institution, then also we can apply section 15A. The next one is development and printing of point of sale material. So you know that when we are purchasing some products or items from supermarket, then you can see there are a lot of point of sale materials. So if we are going to print point of sale materials, if that printing is carried out by the same person or the local institution, that cost can be deducted under section 15A. So these are the expenditure that are deductible under section 15A. If we have some expenditure that cannot be categorized under this definition, it is not deductible under section 15A. So you should know better understanding about section 15A and normal deduction rule, main deduction rule, that is section 11. Then prior to year of assessment 23-24, that means for a 2 years of period, we had a special deduction rule, that is additional 100% was allowed as a deduction, but there was a upper cap of 500 million. So that means additional 100% deduction means if they incurred 50 million for a marketing and communication, additional another 50 million will be was given as a additional deduction. But luckily that is not available now, so that period was expired. When we are introducing it, we are allowed it for 3 years period, but after that in the Amendment Act it was decreased to, it was applicable now for only for 2 years of period. So for your year of assessment it is not applicable. But for the deduction of this 100%, there was a very important criteria, that is for the deduction of that amount there was a limitation, that is there should be a 65% of local value addition. If that product has had a 65% local value addition, then only this additional deduction could be deducted with upper cap of 500 million. So that means for the calculation of 65% local value addition, we issued the Gazette notification. In that Gazette notification, it explained how to calculate 65% local value addition. So I have mentioned the Gazette notification here. So if you need this calculation, if you want to know this one, you can refer this, but for your year of assessment this is not applicable. Therefore only marketing and communication expenditure is applicable, that is actual expenditure. So this additional deduction is not applicable for the year of assessment 25-26. that means not for only for the 25-26. From 23-24 year of assessment up to now it is not applicable. So this provision was included in Schedule 6, not in this 15A, but it was available in Schedule 6. Then we can move to the next section, that is section 16. Section 16 is applicable for capital allowances and balancing allowances. So what is the capital allowance? What is the meaning of capital allowance? What is the word, what is the term we are using in the accounting field for capital allowance? We have a capital allowance deduction. So what is the meaning of capital allowance? It is really a depreciation. So in the accounting field, we calculate this as a depreciation. So normally we are allowing deduction of depreciation, but we call it capital allowances. The way of calculating capital allowances are provided in the Act in Schedule 4. So if you go to Schedule 4 in the Act, then you can identify the method of deducting capital allowance. So now we can move to the Consolidated Act. Then it will be very easier for you to identify the way it has mentioned in the Act. So now I think you can see the Act. This is the Consolidated Act. In the Consolidated Act, you can see these special deduction rules. Section 12, that is for interest. Then section 13 for allowance for trading stock. Then section 14 for repair and improvements. So amendments were there. So you know how to include amendments to the section. Then section 15 is for research and development expenses and agricultural startup expenditure. Then section 15A, this is a new amendment included from the 2021 amendment. So it is like this. So you can see marketing and communication expenses. So this is the definition for marketing and communication expenditure. Then section 16. So now we are in section 16. It is for capital allowances and balancing allowances. So some amendments also there. So those are not really applicable. Those are applicable, but it is not much important. So because I have already included in the consolidated act. So we are referring consolidated act. So you can see the applicable amendment also in the consolidated act. So there is a specific, it says so here you can see capital allowances are granted in respect of depreciable asset. Then it says calculated in accordance with the provisions of the 2nd, 4th and 6th schedules to this act. That means it is section 2nd schedule, 4th schedule and 6th schedule are applicable for the calculation of capital allowance. Yes. Please mute your microphone. Then I will show you the schedule applicable for capital allowances. It is schedule 4. This is schedule 4. In the schedule 4 it says 4th schedule. 4th schedule is for capital allowances, balancing allowances and assessable charges. So based on the formulas, based on the things provided in this schedule, we have to calculate capital allowances. So you can see these things. It says the classes of assets, class 1, class 2, class 3, like that. All assets we are using for the business purposes are categorized into several classes. So we have 6 classes that assets are categorized in these classes. So I think you can remember when we are considering repair and improvements, at that time if some assets are categorized under class 4, then restricted amount was 5%. So class 4 means building structures and similar works of permanent nature. That means if we have made some repairs or improvements for a building, then restricted amount was 5%. All other than that, that was 20%. So class 1 is for computer data handling equipment together with peripheral devices. Then class 2 was buses, minibuses, like that. Then class 3 also railroad cars, locomotive, All other plant and machinery also included in class 3. Then 4 is for building structures. 5 is for intangible assets excluding goodwill. So if it is an intangible asset, then also there is a depreciation amount. So this is for a capital allowances, it is equal to depreciation. Then sixth class is for milking machine. It is an amendment included in section in 2021 amendment. So this is the method of calculating capital allowances. So this is the depreciation period, capital allowances granting period. If it is a class 1 asset, 5 years capital allowances can be granted during the period of 5 years. Number of years are 5. That means if we are using an asset, for the yearly value, to calculate yearly value, we have to divide it by 5 because that asset can be used for a 5 years period. So that is why we have lifetime is 5. We know that there are more than 5 years we can use that asset. But for granting capital allowances, we can grant only for 5 years. So this is the depreciation period. If it is in the fifth category, in the fifth class, that means it is an intangible asset. So intangible asset has indefinite lifetime, then we can divide it by 20. Then for the milking machine, that is 20. So after that, it has mentioned no capital allowances shall be granted to a person in respect of a road vehicle other than, then you have given some vehicles. Then depreciation basis was mentioned in this schedule. Then balancing allowances and accessible charge also mentioned under schedule 4. So now we can move to the presentation slides. Then again we can come to this schedule 4 for more clarification. Okay. Now you know about something about the capital allowances and balancing allowances. So under section 16, it says capital allowances can be deducted and balancing allowances can be deducted. So now you should know what is the meaning of capital allowance and what is balancing allowance. When calculating person's income from business for a year of assessment. So that means section 16 is applicable only for the calculation of business income. If we are calculating an investment income, section 16 is not applicable because Act says this is only applicable for the calculation of business income. Then capital allowances and balancing allowances shall be deducted. How do we deduct it? After calculating it in accordance with the provisions of the schedule. So then we can calculate the capital allowance. So what is the meaning of capital allowance? Capital allowance means if we purchased an asset and if we use that asset for the production of business income, but if we are using that asset for more than 1 year, more than 12 months period, we call it capital nature expenditure. For an example, if we purchased a machine for the production of our business income, so we cannot use that machine only in 1 year. So we can use that machine for a several period. Therefore, the total cost of that asset cannot be deducted from 1 year of assessment because the lifetime of that machine is not only 1 year, it has more than 1 year. That is why we are granting capital allowances, so we are considering the cost of the asset, then lifetime of the asset, so that is the depreciation period. So we believe that these assets can be used for 5 years period. So we divide that cost from 5 to calculate 1 year's cost. So that is why we are calculating capital allowances by using the lifetime of the asset. So for that purpose, that asset should be a depreciable asset. A person is entitled to claim capital allowances if such person is the owner of the depreciable asset. So there should be a depreciable asset. That means for the deduction of capital expenditure, that expenditure should be incurred for a depreciable asset. So for the depreciable asset, we have given a specific definition. I have explained it in our first or second session. So depreciable asset means an asset we are using for the production of business income. So when we are using that asset for a production of business income, the value of that asset is diminishing. That means if it is a land, value of that land is not diminishing, it is appreciating. But if it is other than the land, all assets are depreciating. So we call them depreciable asset. So for the deduction of capital allowances, that person should be the owner of that depreciable asset, and that person should use that depreciable asset. So now you can understand, for the deduction of capital allowances under section 16, there are some specific criteria, special items. First one is the asset should be a depreciable asset. If it is a land, we cannot categorize land as a depreciable asset. Therefore, for the land, we cannot deduct depreciation. Then that depreciable asset should be owned by that person. If we are considering an individual, then that asset should be owned by that individual. If we are considering a company, that depreciable assets owner should be that company. The next important thing is that depreciable asset should be used them at the end of the year of assessment in the production of the person's income from business. So now you can understand, for the deduction of depreciation capital allowances under section 16, it should be a depreciable asset. There should be owner user condition. That means owner user condition should be fulfilled. Owner user condition means the asset should be owned by that person, and that asset should be used at the end of the year of assessment. At the end of the year of assessment also, that asset should be used by that person. Then only we can deduct capital allowance. So now I have a question. I have purchased an asset in the year of assessment 25-26. So it is a depreciable asset. Then I am the owner of the asset. I am using that asset. Can I deduct capital allowances during the period that they purchased that asset? That means for the year of assessment 25-26, can we deduct capital allowances? Consider these conditions. We purchased an asset in the year of assessment 25-26. Can I deduct capital allowance for that year of assessment? I need your answer. can I deduct for the first year of assessment that we purchased that asset? Because we have several years purchasing year, then we are using that asset, then we are disposing that asset. Dispose means if we there are some year of for a sometimes for the for some year of assessment we are going to sell it. We sold that asset. So we have three situations: purchasing period, then the balance period, then the disposed period. So now my question is, for a period, for the year of assessment that they purchased the asset, is entitled for the deduction of capital allowance. I need your answer. Yes, you say yes. So why? Why we can deduct expenditure as a capital expenditure during that period? So what is the reason? You said yes. So what is the reason? What are the conditions fulfilled for that deduction? So it is suppose it is a machinery. We purchase that machine for the use of the production of our products that we are selling. So that is the first year of assessment. So you said we can deduct capital allowance. To consider whether it is allowable as a deduction or not, we have to consider whether it is a depreciable asset, whether we have the owner of the asset, whether we have used that asset. When? At the end of the year of assessment also, we have to use that asset to be deducted capital allowances. So you said yes, because during the purchased year, we are using it. It used at the end of the year. Okay. So after using that asset, suppose for a 2 or 3 years period, we sold it. So then the selling year, can we deduct capital allowances? No, yes. So now I think all of you can understand what I am talking. That means for the purchased year, capital allowances can be deducted if we use that asset. That condition is very important. For the deduction of capital allowances, we had to use that asset for that year of assessment. And it should be with us until the end of that year of assessment. So if we sold that asset during that year of assessment, that means even though we used it at the end of year of assessment, we don't own that one. So that is why we are considering that if it is a selling year, we do not allow capital deduction of capital allowances. So you should keep these things in mind. It should be a depreciable asset. For the shall be calculated in according to the yes. So owner user condition should be fulfilled. The should be with that person at the end of the year of asset. Therefore, for the purchased year, we are allowing capital allowances without considering the period we used it. That means sometimes we use that asset only for a month, only for a day. It doesn't matter to total year of assessment, even though we purchased that asset in the last day of the year of assessment, and if we use that one, we can deduct capital allowances. If we sold that asset during any year of assessment, even though we used that asset for 360 days and then we sold it, but without considering the period we used that asset, we cannot grant capital allowances. For the purchased year, we will allow for the full year of assessment capital allowances, and for the sold year, we do not allow it as a deduction. Then the capital allowances shall be calculated in accordance with the straight line method. So that is why we divided it by 5 or 20. That means the same similar amounts we will allow as a deduction. Then full capital allowances will be granted for the year of acquisition. Capital allowances will not be granted for the year of disposal. So I know you know the reason. So I have mentioned the reason. Now you have to keep it in your mind. Shall not be deferred to a later year of assessment. So what is the meaning of defer? We cannot say during this year of assessment if it is a depreciable asset, I am the owner of the asset, I use that asset during that period. That means all conditions are fulfilled. Then it is deductible. Capital allowances should be deducted. I cannot say I am not going to deduct capital allowances during this period and I am going to defer it to later period, subsequent period. We cannot say like that. Definitely, whether we like it or not, we shall deduct capital allowances in that period, because it shall not be deferred to a later year of assessment. Then the next one is, shall not be granted in respect of a road vehicle. Yes, all are road vehicles. So, shall not be granted in respect of a road vehicle other than a commercial vehicle. So, if it is a commercial vehicle, capital allowances can be deducted. If it is a bus or minibus, can be deducted. Goods vehicle can be deducted. Heavy general purpose or specialized truck or trailer or motorcycle, then capital allowances can be deducted. But if it is a road vehicle, then capital allowances cannot be deducted. Now you have a question. What is that? What is the road vehicle? All are road vehicles. No. For that term, for these two wordings, we have a special definition in the Act. So, it says in another way, if it is a road vehicle, it is not allowable as a deduction other than commercial vehicles. Then for the commercial vehicles, we have a definition. So, other than that commercial vehicle, all other vehicles are not allowable as a deduction under section 16. So, this is the definition for commercial vehicle. It says, commercial vehicle means a road vehicle designed to carry loads of more than half a ton, carry more than 13 passengers, vehicles used in a transportation, vehicles used in a rental business. So, if that vehicle is like this, we call it a commercial vehicle. That means for the commercial vehicles, capital allowances can be deducted. Other than these commercial vehicles, it is not allowable as a deduction. Give me an example for other vehicle that other than this commercial vehicle. Give me an example. Give me an example. So, that kind of vehicles are not allowable for the capital allowance. So, only commercial vehicles are allowable for the capital allowance, deduction of capital allowances. You have given a definition for the commercial vehicle. So tell me a vehicle that capital allowances is not allowable. Carry loads, carry passengers, used in the transportation. So what are the vehicle other than this? Motor car, yes. Yes, Anurad, that is motor car. We cannot categorize motor car under these things, but we can categorize that motor car to under this part. Last one, vehicle used in a rental business. That means if we are using a motor car for the traveling purpose, that motor car is not allowable for the deduction of capital allowance. But if that car is used in the rental business, then it is allowable as a deduction. If it is used for the rental business, then it is allowable as a deduction. So in addition to that, we can, if we are using that vehicle in the rental business for the tourism, for an example, if we are using it in the tourism business, then motor cars can be allowed. Other than that, motor cars are not allowable for the deduction of capital allowance. Then this is the straight line method that we should calculate capital allowances, and formula for calculating capital allowances: A divided by B. A means depreciation basis. Depreciation basis means the cost or the written down value. Then the number of years provided in the fourth schedule. So if we are considering in the first year of assessment, then the cost is equal to A. Then the number of years equals to 5. Then we can calculate written down value by deducting that calculated depreciated amount from the cost. Then we have written down value. For an example, A equals 100,000, B equals 5. Then what is the amount of capital allowance? That is 20,000. So 100,000 minus 20,000 is the written down value. Then which amount we have to divide this amount? Then what is the number of years we can divide? Since we applied written down value, B equals 4, not the 5, because we have already calculated for fifth year. Then we have balance years, that is 4 years. So we have to divide it by 4. Likewise, we can apply this formula. So if we are using that depreciable asset only partly used in the production of income from a business, at the end of the year of assessment, the cost of and consideration received for the asset shall be apportioned according to the market value of that part of the asset that is used in the production of business income, and that part not. That means sometimes in the practical scenario, there are some assets. Suppose it is a vehicle. So we are using that vehicle for the transportation of manufactured products, and it is liable. And sometimes we are using that vehicle for another business. So then we have to consider the apportioned amount as a deduction. Then what is the depreciation basis? Depreciation basis is the written down value or the cost. Then that is the depreciation basis. Then I have explained about commercial vehicles. Then this is the schedule in the Act, Schedule 4. So it has given number of years that we can deduct capital allowances. So that is why we are dividing cost by 5 or 20 or 2 or again 20. Then the next one we can deduct is assessable charge. First one is balancing allowance. First one is capital allowance. It also can be deducted. Then we can deduct assessable charge. So what is the meaning of assessable charge? Suppose we have purchased an asset. Then we sold that asset. Because of that sale, there was a loss. After selling some depreciable asset, suppose there is a loss. That loss also can be deducted when we are calculating the business income. We call that loss as assessable charge. So then how do we calculate the loss? It is mentioned like this. Where a depreciable asset of a person is realized means we sold it by the person before the end of the year of assessment. Then the assessable charge is included in calculating person's income for the year. This is the formula we have to calculate assessable charge. A equals consideration received, that means sales value, minus written down value of the asset at the time of realization. That means if we sold that asset during this year of assessment, so the written down value up to this year of assessment, we have to consider to deduct from the consideration. Then the consideration minus written down value, that is assessable charge. Then the balancing allowance. Assessable charge means here we have a profit, not the loss. Here we have a profit because consideration is higher than the written down value. Written down value means the value of the asset today. If we are realizing, if we are selling that asset today, if we have sold that asset today morning, then we have to consider the amount we received for that realization and the written down value of that asset during this year of assessment. So we cannot deduct capital allowance for the selling year. So therefore we have to consider the open value, open written down value. Then if A is higher than B, then there is a profit. So we can deduct not the assessable charge. If it is an assessable charge, then we have to add it to the business income. So I think you can remember when we are considering the business income under subsection 2, I explained that if there are some inclusions, if there are some income that are mentioned under subsection 2, that amount should be included in the business income. So assessable charge also one of that type of income. So the balancing allowance means the loss we are incurring of selling that depreciable asset. So after selling a depreciable asset, there may be a profit or a loss. If it is a profit, we call it assessable charge. If it is a loss, we call it balancing allowance. Since we are considering the deductions, only loss can be deducted under section 16. If there is a profit, that profit should be added to the business income under section 6 of subsection 2. Subsection 2 of section 6. So how do we calculate balancing allowance? It is like realized during the year of assessment and in respect of which capital allowances have been granted in that year of assessment. So So this is the formula for the calculation of balancing allowance, that is inverse of that profit accessible charge. Earlier we deducted B from A, now we are deducting A from B, vice versa. So A B deducted from A, then we will have an accessible charge. If it is an accessible charge, we have to include it in the business income. If it is if B is higher than A, that means we have a loss. That loss can be deducted under section 16. So this is a second schedule. So in the second schedule, we have a enhanced capital allowances. So this is normal deduction rule. That means normal capital allowances application is provided under Schedule 4. In addition to that, Schedule 2 and Schedule 6 also included some kind of capital allowances. We call it enhanced capital allowance. So enhanced capital allowances means that capital allowances also can be deducted in addition to the capital allowances deductible under Schedule 4. So second schedule and sixth schedules, two schedules are provided this concession to promote investments. That means if we want to invest some money in new businesses, then in the earlier years we granted exemptions to promote investments. But from this act, we are promoting investors by giving this kind of enhanced capital allowances. So enhanced capital allowances means normally we are granting normal capital allowances during several years of assessments. But if it is an enhanced capital allowances, we are granting that enhanced capital allowances in the first year of assessment. That means after finalizing the total investment requirements. So these are the investment requirements. Schedule 2 is for the investments more than $1.3 million. If we are invested in more than $1.3 million but less than 100 million in US dollars, in the northern province 200% capital allowances can be deducted after finalizing the investment value, after investing the total investment value. If it is in other than northern province, 100%. That means if we incurred $100 million rupees for the investment, then again 100 million can be deducted as a capital allowance. So if it is with in between 100 and 1000, then 200 deduction is allowable. If it is other than northern province, 150 is allowable. If more than 1000 rupees were invested in the new investment for the capital depreciable assets, then 200 can be deducted. For an example, if we have incurred 1000 million US dollars for the new business as depreciable assets, then 2000 can be deducted as an enhanced capital allowances. So that is a special investment incentives given for encourage new investments. So this is enhanced capital allowances under section Schedule 2. Then we have enhanced capital allowances under Schedule 6. So that is not available for the year of assessment 25-26 because it was expired in 24 March. So therefore that is not entitled for the deduction. So those are the important things that are relevant for the capital allowances. So I have send you. I have shared a question paper with Miss Kalhari. So I think you have got it. You have that document. So take that document out. Then we are going to calculate capital allowances. I have given you an example, a question, two question papers. We can start from the first one. So now you can take it out, because after that we can go for section 70. Okay. Do you have this one? Do you have this document? Have you got it?
Yes, madam.
Okay. So we can do the calculations. We can calculate the capital allowances for this allowable amount of capital allowances for this one. So let's go through the question. Capital allowances and assessable charges and balancing allowance. So capital allowances is the cost part. Assessable charge is if there was a profit, that amount. If there is a loss after realization, we call it balancing allowance. So this is the way I am giving you for your examination. So this is a part of that question. It says the capital expenditure incurred on these assets. So we have a balancing amount. That means we are going to calculate an existing business. This is not the new one. This is an existing business. So therefore we have opening balance. We have lands. The opening value of that land is 60 million. During the period, the company, this person purchased a land. The cost of that land is 6 million. And this person sold one of his land. The cost of that sold land is 10 million. So this is the balance as at 26 March 31st. So you are going to calculate 25-26 year of assessment applicable capital allowances. And if there was a assessable charge, or if there is a assessable charge or a balancing allowance, you have to calculate. Then this person has buildings. At the beginning of this year of assessment, 42 million buildings were there. Then during the year of assessment also, 8 million worth of buildings were purchased. The balance assets are 50. Then machineries, 32 million worth of machines were there. Then during the period they purchased another 8.2 million machines. Then office equipment, 10 million office equipment was there in the beginning. Then during the period that person purchased 3.2 million assets. Then motor vehicles, 16 million motor vehicles were there. During the period they purchased another 7 million vehicle and sold 6 million worth of vehicle. The balance is 17. Then computer also same. 7 million computers were there in the beginning. During the year of assessment, new additions are there, purchased. Then 2 million worth of computers were sold during the period. The balance is 8.6. So in the next part of this table, I have given you depreciation. So this depreciation was in accordance with the company requirements or an individual's requirement based on their values. So that is book depreciation. Book depreciation is done by the individuals and corporations in persons, but we cannot calculate depreciation in accordance with their book values. So what we have to do, even though they have deducted depreciation based on their values, based on their percentages, we have to calculate capital allowances based on the rates given in Schedule 4. So book depreciation was done by the organization or a person based on their requirements, based on their values, based on their percentages. So, but we cannot consider that one for the capital allowances. We have to separately calculate the capital allowances amount for the specific year of assessment. So this is the additions. So during the year of assessment, they have calculated this kind of depreciation. Then for the sold values, this is the depreciation they have already deducted for the values sold during the year of assessment. So this 4,500 is applicable for motor vehicles sold during this year of assessment. That means for the value of 6 million. Then you have given these explanations one by one. A wall has been constructed around the land by incurring rupees 6 million. So there is a land, and in the land it has mentioned additions. So for this addition, you have given a description. It says, a wall has been constructed around the land by incurring 6 million during the year of assessment, and the said cost has been capitalized under the land account. That is why it has mentioned here. Another land utilized to store dilapidated machineries has been sold for 18 million during this year of assessment. So they have sold 10 million worth of lands for what? Which amount? So what is the sold value? Consideration. The cost of the land is 10 million, but they sold that land for 18 million. If we calculated in general way, what is the profit? What is the profit? What is the profit of realization of this land? They purchased a land. Yes, what is the profit? 10,000 is the cost. They sold it for 18,000.
8 million.
8 million is the profit. Yes, 8 million is the profit. So that is how we calculate the profit, since this is a business asset. What is the meaning of business asset? Business asset means a capital asset used for the business purpose. So I think you can remember the definition for capital asset, because normally we called capital assets in generally that is a land. Land can be considered as a capital asset. If that land is used for the business purpose, we call it business asset. Then we are calculating the profit or loss by deducting cost from the historical cost from the sales value. So that is why you can say very quickly the profit, because 18 million is the consideration 10 million is the cost. The difference of 10 to 10 and 18 is 8 million. So that is the way of calculating the profit or loss of a business asset. So it is a business asset. Business asset means land used for the business. We call it a business asset. Then you have given a wall that is constructed around the land. So is it a depreciable asset or not? You know that the land is not a depreciable asset, but if it is a wall constructed around the land, is it a depreciable asset or not? If you can remember the schedule 4, the table and 6 classes, you can give me an answer. Yes, it is a constructed structure. Under structure, it is a depreciable asset. So we have to grant depreciation for the wall. If it is a land, this 6 million is for a land, we cannot grant capital allowances. Okay? Then we can move to the next one. So details of the buildings are as follows. So here you have details of the building. So during the year of assessment 25-26, they purchased a building used for the stores. Amount is 8 million. So can we see that 8 million in the building line? Yes, this is the building. So in the beginning of that year of assessment, 42 worth of buildings are there. In addition to that, 8 million worth of building they have purchased or constructed during this year of assessment. So you have given a breakup of this 42 plus 8. That is this. So purchased in the year of assessment 25-26, that is 8 million. Then in the 21-22, they constructed the factory worth of 16 million. 18-19, they purchased a showroom, that is 10 million. 17-18, they constructed the building for 7 million. Then 11-12, they have constructed office for 9 million. So now you have the breakup of these buildings. So then you have to start granting capital allowance for the year of assessment 25-26, because now we are in the year of assessment 25-26. So we have to consider the depreciable period for a building. So what is the depreciable period for a building? What is the lifetime of that building according to that table? Who can tell me? For a building and a structure, that means for these buildings and for the wall constructed around the land, what is the applicable tax rate, or what is the, sorry, not tax rate, what is the applicable depreciation percentage, or what is the lifetime, what is the how many years we can grant capital allowances? Yes, Anuradha. Oh, Madhushi. Yes, you are correct. That is 20 years. So, 20 years period is available for the deduction. Achala, Shashikala, yes, that is 20 years. For all other cases, that is 5 except milking machine. If it is a milking machine, 2 years period is there for the deduction of capital allowances. Okay, now you can understand. Then we have to consider whether the 20 years are lapsed or not. So these are according to the previous period. So we have to grant capital allowances based on the previous act. Then from 2018-19 we can grant capital allowances based on the new act. So you have given showroom 18-19, so 18-19 to 2025, 25-26, 18-19, 20, 21, 22, 23, 24, 25. That means 8. Now we are in 8th year. So still they have period to deduct capital allowances, because up to 20 years of period they can deduct capital allowances. If it is prior to 2018-19, previous act is applicable. So we have to consider the applicable tax rates based on the previous period. It doesn't matter. For your examination, I will not give some assets purchased prior to that period. Yes. Milk related, that is only 2 years. Then machineries of the company are used to accessible construction. Machineries of the company are used to assemble construction machineries and to produce machinery parts. One new machine has been imported for this purpose from India during the month of May 2025. Rupees 3.8 million has been the CIF value of the machine, and said value has been capitalized in the machinery account. So, in the machinery account, we can see 32 million opening stock. Then during the period, additions are 8.2 million. That means during the period, they purchased machineries worth of 8.2 million. So you have given a description. It says, during the period, new machine has been imported for this purpose and from India during the month of May 2025. That means during the year of assessment. Then 3.8 has been the CEIF value of this machine, and said value has been capitalized in the machinery account. An amount of 200 has been incurred to transport the machine to the factory, and rupees 350,000 and 150,000 which were incurred for custom and clearing charges and machine installation charges respectively have been accounted under the machinery maintenance expenditure account. That means this 8.2 million includes new machine imported from India, but only this value 3.8 million is included here. Then the balance is purchased during this period, maybe from locally. It is not mentioned, so we can make assumption. So 8.2 million is the purchased value during this period. Within this 8.2 million, they have capitalized 3.8 million machine imported from India. So the value is, CIF value is 3.8 million, but in addition to that they have incurred transportation charges, clearing charges and everything. Transport machinery to the factory, then custom clearing and machine installation. So all these three expenditure also a part of the machine, because prior to installation, prior to starting a work, they have incurred this expenditure. So we have to consider these three amounts also as a cost of this asset, not only the CIF value. So CIF value plus 200,000, 350,000 plus 150,000 plus the total amount is the cost of this new imported machine. But they have included only 3.8 million in the addition. Then the balance is the can be local purchase of the machine. So then you have given the breakup of the opening balance. 2021 year of assessment purchase 10 million, 1925 million, 1819 17 million. Then you have to consider the period of use this asset. The earliest one is 1819. From 1819 you have to consider how many years that person has used this asset. 1819, because from the for the purchased year of assessment also we have to grant capital allowances. That means for the 1819 period we have to grant capital allowances. Then calculate it. 1819 1 year, 1920 second year, 2021 21 22 22 23. How many years of assessments? Purchased year is 1819, 1920, 2021, 21 22, 22 23. We can grant capital allowances only for 5 years. Now we are in 25-26 year of assessment. Therefore, we can consider as total capital allowances already been granted. Even though still we have this asset with us from the beginning of from the purchased year, we have to grant capital allowances because we cannot defer. We cannot say we are not going to deduct it in the year of assessment 18-19, but we are going to deduct it in the year of assessment, later year of assessment. So it is not deferred. We cannot defer. Therefore, we have to consider the number of years we have already deducted capital allowances up to the year of assessment in which we are in. So 5 years already lapsed. Therefore, for the 1918-20 machine purchased, that means 5 million machine, capital allowances has already been granted. Then definitely 18-19 amount also granted. So fully depreciated. 18-19 fully depreciated. 19-20 also fully depreciated. 2021 purchased machine. So 21-22, 22-23, 23-24, 24-25. We have granted only 4 years period. So still last year is available for the deduction of capital allowances. That means for the 25-26 year of assessment we can grant capital allowance. Then for the 25-26 year of assessment we have purchased this asset 3.8 million machine and the local purchased one. Then we have to consider whether we are the owner of this asset and whether we use this asset during this year of assessment. So if it is not mentioned in the question, you have to make assumption. Okay, now I think you can understand what I have done. Then we can move to office equipment. Then we can move to the office equipment description. In the office equipment, we have 8 million assets in the beginning. Then during the period, we have purchased 3.2 million office equipment, no disposal value. So, why don't you capitalize related expenses to the assets? Yes, we have to calculate it. That is why I explained not only that 3.8 million, in addition to that clearing charges, conveying charges, installation charges, we have to capitalize. In this example, they capitalized only the CIF value. It is wrong. So, they have deducted that expenditure under maintenance account. That means as a revenue nature expenditure, we cannot do it. So when we are calculating the taxable income, what we have to do, we cannot allow it as a deduction under revenue expenditure, but we have to deduct it under capital nature expenditure. But capital nature expenditure cannot be granted, cannot be deducted in 1 year of assessment. That is why we have to give capital allowances for 4 years of period. So I have the answer. I will explain it with the answer again. Achala, are you going to have a dinner now? Yes, could you give us a break to take our dinner? Okay, you can take, no issue. That is 8:39. So is it enough 10 or 15 minutes to have your dinner? Okay, you will have a break. Now it is 8:40, 8:50, 8:55. I will give you 15 minutes break. Take your dinner and come. බඩගින්න ඉන්න අයට පාඩම් කියලා දෙන්න බෑනේ නේද? ඒක නිසා ඩිනර් අරන් ඉන්න හොඳයි. අනිත් අය ඩිනර් ගන්නව නම් ගන්න. මම නම් ඩිනර් ගන්නෙ ලෙක්චර් එක ඉවර වෙලා. Okay. I will give you 15 minutes period time. 15 minutes time. Okay. Okay, we can start. I think you had your dinner. Then we can start. I think I'm audible. So this is regarding the office equipment acquired during the period as follows. So 19, 20, 21, 21, 25, 26. So you can move to the table. In the table you can see office equipments only purchased during the year was available, no disposals. So 3.2. Only thing you have to consider when you are granting capital allowances, whether since ownership is there, because since we own by these assets, that is why we have in our accounts, but we have to consider whether we use that asset during this period or not. So if it is not clearly mentioned, you can make assumptions saying that we assume that this asset is used during this year of assessment, like that. Okay. Then we can move to the motor vehicle details. A motor lorry which was acquired during the year of assessment 22-23 has been disposed. That means during the 23 there's a lorry. So we can move to the table. You can see, yes, motor vehicles are there, 16 million open balance. During the period 7 million vehicle was purchased. Then the disposal value is 6 million. That means 6 million worth of vehicle was sold during this year of assessment 25-26. It is the value is 6 million. So it has mentioned in this document also. It says vehicle purchased during the year of assessment 22-23 has been disposed on 1st of June 2025. So the date is within the relevant year of assessment. So you have to consider it for the year of assessment 25-26. And a new motor lorry has been purchased for 7 million. So it has mentioned here 7 million. We can go to the table also to check whether that is correct or not. Yes, we can see 7 million additions are there. Profit on disposal of lorry included in accounting profit is 1.8 million. Details of the vehicles are as follows. So here we have given the details. What are the details? Given details about the disposal, because disposal values are very important to calculate disposal gain or loss. So for the calculation of gain or loss, what are the most important two components we need for the calculation of gain or loss? What are the most important components we should know? One is the selling price. Then the other one is either cost or it can be a written down value. Then we can calculate the loss or the gain. So now you know that we need two values for the calculation of gain or loss. So here you have given, we have to check whether we have both values. Here we have given only the cost of the sold asset. It is mentioned in the table. Here you can see that is 6 million worth of vehicle was sold during this period. So we should know the sales value of that vehicle. So it is not mentioned. Here you can see it is not mentioned. If it is not mentioned, we have to calculate the sales value of that lorry. How do we calculate? We have given a book profit. Book profit means profit calculated in accordance with the book entry. So using that value, we have to calculate the sales price, because we know the cost of the asset, then book depreciation of the asset. What is the book depreciation? We have sold 6 million worth of vehicle. So for that vehicle, we have already granted capital allowances up to 4.5 million. That means we have purchased it in the year of assessment 22-23. So in the 22-23, so for the 22-23 we have granted capital allowances, not the capital allowances, book depreciation. We depreciated it in the year of assessment 22-23, 23-24 and 24-25. So 3 years period capital depreciation was done. The amount is 4.5 million. That means the worth of the asset, cost of the asset is 6 million. From 6 million, 4.5 million depreciation was already done. So what is the written down value of the asset? 6 million minus 4.5 million. So that is the actual value of that asset. By selling that asset for some amount, we have received 1.8 million profit. That means we know the profit value, we know the written down value of the asset, we know the cost of the asset. So using these values, we can calculate the sale proceed, the value we sold that lorry. So using that sold value, we can calculate our capital allowance amount for the calculation of, for the deduction of this period. Then for balanced vehicles, we have to grant capital allowances, because for the period of disposal, we cannot grant capital allowances. Only profit or loss should be calculated for the assets disposed during the period. For the balance assets, we have to calculate capital allowances. Since this is a lorry, capital allowances can be granted. Since this is a van, capital allowances can be granted. Since this is a motorcycle, capital allowances can be granted. Lorry also, capital allowances can be granted. So it says another 7 million lorry was purchased during this year of assessment. That means that is also a lorry purchased during this period. So we can grant capital allowances for that lorry, but what we have to consider? We have to consider whether we use this lorry during this period or not. So if we use that lorry during this period, capital allowances can be granted. Then we have given computer details. So for these computers, we have to go to the table to check what the details. So additions are there, disposals are there. For 2 million disposal is there. So computers depreciation also there. So we know the cost, we know the depreciated amount. What else? It says no scrap value. No scrap value means no written down value. That means total amount is depreciated. The balance cannot be sold for a money, no, for a cash or for money, because there is no scrap value. Then we have to calculate it as no profit, no loss. So these are the values, these are the details given in this example. I think you have this sheet, this question paper. Then we can move to the answer sheet. This is the answer sheet. This is how you have to do your calculation. Actually, you will not have this kind of capital allowances calculation, but this calculation will be included in your question. That means I will give you a question. That question include capital allowances part. So it is a part of the main question. So you have to mention plus mark and the minus mark. Plus mark is for the additions, minus mark is for the deductions. So what is the first one? What is the first one? First one is a wall. A wall has been constructed, and in addition to that it says the land was disposed. So there is a land. So there's a land. So for that land it was disposed. Consideration is 18 million. That is 18 million. Then you have given cost, that is historical value. So I told you that since this is a business asset, we can deduct historical cost to be calculated the profit or loss. But if it is an investment asset, you cannot deduct historical value to calculate the profit or a loss. So when we are doing investment part, I will explain how to calculate profit or loss of the investment asset. Here we are talking about business asset, so we can calculate business asset profit by deducting historical cost. Historical cost means the cost we incurred to purchase that land. Then other lands means the total value of the land is 60 million. So from that 60 million we deducted 10 million. We sold 10 million worth of land. Then the balance is 50 million. For that 50 million we will not grant capital allowance. It is not entitled. Capital allowances are not entitled. Therefore, no amount in the plus column or minus column. But 8 million should be included in the plus column because it is a part of the income. Income can be included under plus column and expenditure can be included under minus column. Then there is a wall. What happened to that wall? Value of that wall is 6 million. It is constructed around the land. That means we are using that land, that wall, because it is around the land which is situated there, business place. So that is allowable. That is a depreciable asset. So cost of that land is 6 million. Wall is constructed amount is 6 million. We can deduct it by 20 because we are going to calculate constructed wall. Wall means that is a structure. For the building or a wall, we can calculate capital allowances by dividing it by 20 because 20 years period we can grant capital allowance. Then there are some more buildings mentioned in the question. It says buildings, store purchased in the 25-26. We can consider that stores are used for the business purpose, so that 8 million can be divided by 20. So if you go to the formula I have used, you can calculate. I will share this document with you. The answer sheet will be shared. Then for the factory purchased in the year of assessment 21-22, we can divide it by 20 to calculate the capital allowances part. So it is an expenditure. So it is a deductible amount under section 16. So we can deduct it in the mention it under minus column. Then the showroom that is purchased in the year of assessment 18-19. So it is not a qualified purchased in the year of assessment 18-19. So we can grant capital allowances. If it is, I wanted to give you this building as purchased during the year of assessment 17-18, because if it is purchased in the year of assessment 17-18, applicable act is previous one, so capital allowances are not allowable, because only to the purchased assets we couldn't grant capital allowance. It should be a qualified payment. So I have here, we have to, since it is a showroom we are using for the business purpose, we can assume, I have not mentioned about it, since it is 18-19 purchased one, since it is purchased in the period 18-19, we can say we can grant capital allowances. So what we have to do, we can divide it by 20. 10 million we can divide it by 20 to calculate the capital allowance. Then MD's bungalow, managing director's bungalow, so it is constructed in the 17-18 year of assessment. So it is not a qualified building for the deduction, because it is not the building that is using for the production of income. It is a bungalow for the MD, therefore it is not allowable as a deduction. Therefore I have not calculated capital allowances. Then office building constructed in the year of assessment 11-12. So since it is 11-12 and constructed one, it is a qualified building. Capital allowances can be granted. Under previous act, allowable rate was 6.67%. So don't worry, I will not give you the assets purchased prior to 2018-19 year of assessment, because assets purchased prior to 2018-19 year of assessment, applicable rates are given under previous act. So we cannot calculate, we cannot apply the provisions of that act. When we are doing 18-19, 19-20 period, that means very beginning calculations, at that time we applied these kind of assets that was purchased prior to 2018-19. But I will not give you the questions that kind of rates are applicable. Then we calculated office building. If it is office building constructed after 18-19, we can grant capital allowances of 1/20th. But since this is a capital allowance, since this is an asset building purchased in the year of assessment 11-12, so we granted capital allowances based on the percentage applicable under 2006 Act. Then we can move to the machinery. We can move to the machinery. We can move to the machinery. New machinery was there. New machinery was purchased. So the value of the new machine was 3.8 million. 3.8 million. Machine CIF value was 3.8 million. But we have to consider the balance expenses also, clearing charges, carrying charges, and installation charges, as installation charges also should be included to that value also should be capitalized. It is not capitalized under the in this calculation, but we have to capitalize it. We have to grant capital allowances on that amount. The total amount should be calculated like this. I have added 7,000 here because when they are calculating their book profit, they have already deducted these 700,000. So if we are considering book profit to be calculated accounting tax profit, we have to add it back. So in the next example you can understand it. So please don't consider this one now. I will explain it later. When we are calculating to full example, you will understand this added amount. Then cost of the new machine is 4.5 million. We can divide it by 5 to calculate the capital allowance. Then balance new machine, because 8.2 million was there as addition, but 3.8 only capitalized. Then there is a balance amount. That balance amount also we can consider as additions during the period. So we can divide it by 5 to calculate the capital allowance. Then machine purchased in the year of assessment 21 to 22, still it is there. 1920, it is already depreciated, so we cannot allow depreciation. For the 17 million also, depreciation already given. Already depreciated, so cannot grant capital allowances for the year of assessment 25-26. Then we have to move to the office equipment. Office equipment 3.2 million purchased during the period. We will assume that it is used during this period. All new machines, new office equipments, we have to assume that it is already used during this period, because owner user condition should be fulfilled for the deduction of capital allowances. Therefore, we assume that it is used. Then another 4 million and 4 million, so that is fully depreciated, as I already explained. Then profit on disposal of lorry. So you have some few calculations in addition to the calculations we have already done. Because as I already explained, in this example, you have not given one of the most important component, that is the cash value. That means the consideration. So for the calculation of that consideration, we should have this kind of calculation. That means this is like a disposal account. We are writing it like this, disposal account. This is the disposal account. Normally we write accounts like this. T account. If it is a T account, we will do it like this. Sorry. Up to this part. How do we do this? We have to mention cost in this part, debit part. In the debit side, we have to mention cost. In the credit side, we have to mention the written down depreciated amount, because that means the worth of this lorry is 6 million, but we have already depreciated 4.5 million. That means the written down value is 6 million minus 4.5 million. 6 million minus 4.5 million. then the worth of 1.5 million machine has been sold, and by selling 1.5 million machine, that person received 1.8 million profit. To get a profit of 1.8 million by selling 1.5 million worth of lorry, what will be the value we sold it? That is what we calculate. So 1.5 million is the balance amount of the worth of that lorry at that time, and after selling 1.5 million worth of lorry, the person received 1.8 million profit. Then what is the value they sold that asset? That is 3.3 million. That is what we have calculated. So this is the value we should debit it to the bank account. That is 3.3 million. That means we sold our lorry at the value of 3.3 million. Then we have to calculate the profit according to the Income Tax Act. Now we know the sale proceed, that is 3.3 million. Cost of the asset is 6 million. We have already granted capital allowance for this lorry. I am not considering the book depreciation, but the capital allowance value we have already granted. So if that person has purchased that asset during the year of assessment 22-23, for the first year we have already granted capital allowances 22-23, then 23-24 and 24-25. That means for 3 years period we have already granted capital allowances. Then after deducting capital allowances already granted amount, we will have the balance value. Balance value means the written down value. So we can deduct the written down value from the sale proceed. Then we will have the profit, that is 900,000. Since it is a profit, I included it under plus column. So this is how we are calculating gain or a loss. Since the written down value is lesser than the sale proceed, there is a profit. If the written down value is higher than the value amount they received, then there will be a loss. If it is a loss, we have to mention it under minus column. So this is how we calculate the profit or a loss of the disposed amount, disposed asset. If you have a question, you can ask now regarding this disposal and the disposed amount. If you have questions, you can ask. If you have a question, you can ask, because definitely you will have this kind of question for your exam, mainly for the mid exam and the final exam both. Therefore, clear all your doubts. We have only 2 weeks period, I think 2 or 3 prior to the mid exam. Today is the first one, another 3 may be there. Then the next week you will have, the last week of this month you will have a mid exam. Then we can move to the computer part. Again, $3,600. Yeah, where is that one? Here, I think this one. 3006. You can see the formula. You can see the formula. Okay, I will answer for the first question, that is 3.6 billion. How did you get this one, 3.6 million? Because we have the cost. To calculate the profit or loss, we should know the written down value of the asset. What is the meaning of written down value? Cost minus capital allowances already granted. Capital allowances minus, cost minus capital allowances already granted. Then you will have the written down value. So capital allowances already granted means we have to consider the purchased year of assessment, and from that purchased year of assessment up to the previous year of the disposed year of assessment, because for the disposed year we will not grant capital allowances. So since we are disposing this asset in the year of assessment 25-26, we have to calculate capital allowances up to the previous year of assessment, that is 24-25. So we have to consider the capital allowances granted to calculate written down value. So for this asset purchased in the year of assessment 22-23, cost is 6 million. What is the capital allowances already granted? We have already granted capital allowances for 22-23 year of assessment, then 23-24 year of assessment, and then finally 24-25 year of assessment. That means for 3 years of assessment we have already granted capital allowances. For 1 year, what is the amount of capital allowances? 6,000. So this is the way I have calculated. 6,000 divided by 5 to consider 1 year's capital allowances up to previous year of assessment. For 3 years of period we have already granted. That is why I multiplied it by 3. Or you can directly calculate written down value by multiplying this amount by 2. So this is how 3.6 million value has arrived. I think it is clear. Achala, is it clear? I think Achala, is it clear? Then capital allowances for office equipment purchased during the year of assessment 21-22, it is not included in the calculation. Office equipment. Really? What is the office equipment purchased in the year of assessment 21-22? 4 million. Isn't it in the document? Office equipment. 4,000 divided by, yes. Sorry. Okay. Thank you. Yes, Charit, I will share this one. Charit, I think you have given me a call. I'm sorry, I missed that one because I wanted to call you later, but I forgot it. Yes, you can share. Thank you, madam. Understood? Yes, yes, madam. Thank you. Okay. Then we have to calculate capital allowances for computer. For 25-26 purchased one, 5 for 5 years we can grant. 24-25 we can grant. 23-24 we can grant. 2021 fully depreciated. 19-20 fully depreciated. So that is the removed one. We have already removed it. So if it is a disposed one, we have to calculate the profit or loss. But when we are applying that amounts into this document, then there is a no profit or no loss, because the cost of the computer is 2 million. Accumulated depreciation, book depreciation given in the table is 2 million. 2 million worth of computer, already depreciated 2 million. No scrap value. No scrap value means we cannot sell it because no value for that one. If it is not mentioned that they have already sold it, sometimes even though there is no scrap value, can be sold for some amount, but it is not mentioned. Therefore, we can consider it as no profit or no loss. So this is how we are going to calculate. This is the way we have to calculate capital allowance for the year of assessment. So I think it is clear. If you have questions, you can ask. If no questions, we can move to the next example. All are clear? This is for the capital allowance part 2. I am not going to do the calculation today with you, but I will give this calculation for your homework. But I will explain little bit of this example. So you have given operating income included in the accounting profit. So this is accounting profit value. Profit on disposal of land 5 million, profit on disposal of motor lorry 1.8 million. So these are book profits. So you know that we do not consider book profits for the taxation, but sometimes we are using these book profits for the calculation of disposed value. So if you have not given the disposed value, you are using these two values, you have to calculate the sale proceed. Then again you have the same document, same table, property, plant and equipment table, land, building, machinery, office equipment, motor vehicles, computers, all are given here. Additions during the period are also here, and disposed values also here. Then during the period, the amount already depreciated, that is the book depreciation, and the value applicable for the depreciated value applicable for the asset, disposed asset also mentioned here. Then one by one you have given description. The land was purchased for 5 million and sold it for 10 million. Then you can calculate the gain or a loss. The balance buildings also there. Value of the building is there. So these are the details of the buildings as at 25/4/1. That means this 61 is for the opening part. Sure. So read very carefully. In the previous one, I gave you the total description breakup of the assets. But in this question, I have given you the breakup only for the opening balance. So if it is for the opening balance, you have to consider the additions for granting capital allowances. So keep it in your mind. Then details of machineries, assets. So here also beginning, opening, breakup of the opening balance. Then you have to grant capital allowance for the assets purchased during the period. Then details of the office equipment. Then again motor lorry. So that lorry was sold during the period. Then computers. So that is question 1. Then we can move to question 2. Again you will have this kind of table. Cost part is here and the depreciation, book depreciation part also here. You have given additions during the period and disposed value during the period. Then depreciation for the year of assessment, book depreciation, and the book depreciation of the disposed amounts. Then you have given profit from each disposal. All are profits, no losses. So using these values, in general you may have not given the sale proceed. That means using these values, you have to first of all you have to calculate sale proceed. After that you have to calculate gain or loss. Then you have all assets as at 25/4/1 were purchased during the year of assessment 22-23. So when you are calculating the depreciation on previous year of assessments, you have to go up to only 22-23 because purchased value of all assets, opening assets, are on 22-23 year of assessment. Then land used for storing, there's a land sale. So it is, you have to consider whether it is a business asset, business land, or a investment land. Since this is used for the business purpose, we can consider it as a land used for the business, then it is a business asset. Then the boarding house also there, so we have to consider whether an asset is used for the business purpose or not. If owner user condition is fulfilled, then only we can grant capital allowances. So you have to consider those conditions when you are deducting capital allowance. Then photocopier was disposed during the period. Then the computers also disposed. So these are the two questions I am going to give you for your homework. So try to calculate capital allowances, balancing allowances and assessable charges for these assets. If you have a question, we can discuss in the next time. For prior to winding up today's session, if you still have some questions or if you need more clarifications regarding any part of the capital allowances, you can ask now, because for the calculation of for your homework, you should have better knowledge about the depreciation calculation, capital allowance calculation. So if you have questions, you can ask now. Yes, I will share the answer sheet. I'm sorry, I can't remember how to include it in the chat box, the answer sheet. You are requested to include it in the answer sheet. Can someone help me to do it? I'm sorry, my technical knowledge is very low. So I can share it with by email or a WhatsApp, but I can't remember to add it into the chat box. How can I do it? Who can help me? After the pencil icon. Where is the pencil icon? I'm sorry. Next to the emoji, there is a T. In the emoji one, in the left side, it is T. අනේ කොහෙද තියෙන්නේ? right side. left right උත් මාරු වෙලා දැන් තියෙන්නේ. මෝ කියන තැනද? නෑනේ. කොතනද තියෙන්නේ? next to GIF. කොහෙද අනේ මේක තියෙන්නේ? කාටද පෙන්වන්න පුළුවන්?
මැඩම් chat box එක යටම තියෙනවා emoji එක අර happy face එක වගේ තියෙන මැඩම් ඊට එහා දකුණු පැත්තේ.
ඔව්. ඒක අයිනෙන් තියෙන T විතරයිනේ. T අකුරක් විතරනේ
නෑ
තියෙන්නේ.
මැඩම් දකුණු මැඩම්ගේ right hand side එකේ තියෙනවා file එකක් වගේ icon එකක්.
මේක නැහැනේ. මම එදාත් ඔයගලට ෂෙයා කරේ ඒ වගේනේ. T අකුරක් තියෙනවා, emoji එකක් තියෙනවා. ඊට පස්සේ අර ෂෙයා කරන අර arrow එක විතරයි තියෙන්නේ. එතන. පේන්නේ නැහැ නේ. කලින් දවසේ කොහොම ඉල්ලලා මම ෂෙයා කරා මට මතකයි. දැන් මේක හොයාගන්න නැහැ. chat box එකේ. මට කාගේ හරි email address එකක් දෙන්න මම email කරන්නම් ඒක. ඊට පස්සේ අනේ ඔයගොල්ලෝ එහෙනම් ෂෙයා කරගන්න. ඈ මගේ ඉතින් ටෙක්නිකල් දැනුම ටිකක් අඩුයිනේ ඔයගොල්ලෝ තරන්නේ නැහැ. ස්ක්වෙයාර් අයිකන් එකක් නැහැ. ඇත්තටම නැහැ. ඔමියා කියන්නේ ඔයගොල්ලෝ ස්ක්වෙයාර් අයිකන් එකක් තියෙනවා කියලා මෙතන නැහැ නේ යට. ඇයි ඒ? හරි මම මේ තියෙන email address එකට email address එකක් දැම්ම කවුද? email address ගොඩක් එවනවා ඒ පාර. අනේක දැන් ප්ලස් මාක් එක තමයි නැත්තේ. මටත් මතකයි ඉමෝජි එකත් එක්ක ප්ලස් මාක් එකක් නානේ අම්මෝ. මං කවුරු එක්කෙනෙක්ට දාන්නද මේක? ඉන්න බලන්න ආයිතරම් බලමු. ප්ලස් මාක් එකක් ඇයි මේකේ නැත්තේ කියලා. හරි මට කවුද මෙතන මම කාටද මේක දාන්නේ? ඉස්සෙල්ලාම මට කවුද දැම්මේ? ඉස්සෙල්ලාම මට දැම්මේ මේක නුවන් කියලා එක්කෙනෙක්. මං එයාට මේල් එක දාන්න.
Okay, ma'am. I will share with others.
Anne, thank you very much. Okay, I will share it with you. Then amila@gmail.com නේ. හරි. එහෙනම් so we can stop the session now. ඊළඟ දවසේ මම චුට්ටක් මේ ඉගෙනගෙන එන්නම් ඔයගොල්ලන්ට. first click chat then plus mark. අන්න ඒක තමයි නැත්තේ plus mark එක නෑ මගේ කොහෙන් හරි. හරි අපිට plus mark එක හොයාගන්න තැනක් නැහැ. plus mark එක මම ආයිත් බැලුවේ එකයි තියෙද කියලා. right click කරලා ගන්න තැනකුත් නැහැ. හරි කමන්නේ. මම මේ කවුද නුවන්නේ? amnnilanга@gmail.com. හරි මම මේ email එකට මේක දාන්නම්. එහෙනම් අපි we can do our next session in next Friday. Then we will discuss the two examples. So now we can stop the session. So we have another 10 minutes. If you have questions, you can ask. මොනවාරි ප්‍රශ්න තියෙනවා නම් සිංහලෙන් කමන්නේ අහන්න. මම හැමදාම කියනවා වගේ දැනුම තමයි වඩා වැදගත්. ඒක නිසා ප්‍රශ්න තියෙනවා නම් අහන්න.
Madam, is mid exam is computer based exam or written exam?
No, actually, it is a written exam. I think they cannot provide you that computer-based thing. So I don't know. Up to now, I have given only the written-based exam because we have to calculate. Actually, it is, but it is very easy if you can do it in computer basis. But I don't know how to mark it, and then how I don't know how to do it. I will check with Miss Kalhari. Then I will let you know. Normally, it is a written exam.
Okay, ma'am. Thank you.
Okay. Okay. Then we can stop the session now. Then good night. I will share the answer sheet with Mr. Nuan, so you can share it with others. Then good night all. Good night. Okay, good night. Bye bye. Actually, you have asked about past papers. I think past papers will be provided by Miss Kalhari, but that is also for the final one, not for the midterm test and the others. So I will do some examples with you. Then you will have a knowledge about the calculation. Next, prior to the exam, we will do one or two examples. Okay.